Well, in June this year, just ahead of the release of financial results from Naspers, Piet Viljoen, who manages the Merchant West Value Fund, was rather scathing in his criticism of the management team feeding at the shareholder trough. Yesterday, Bob van Dijk, the chief executive of Naspers, departed the scene rather acrimoniously, perhaps, or we'll find out in a moment. Piet's here to give us his insights. Piet, I was on the conference call where Koos Bekker and the new chief executive, Ervin Tu, were holding fort. And there was a lot of interesting stuff to come out of that. But Bob van Dijk, the chief executive of Naspers, up until Monday morning, was not on that call. Is that usual?
Probably not. But in this case, one probably expected because his departure is very sudden. So I'm sure it wasn't all amicable and backslapping and big hugs all around.
But Naspers, to me, has always been a company that has prepared itself well for its successions. If you think of Ton Vosloo, who went from chief executive then to chairman, Koos Bekker from chief executive then to chairman. But this chief executive has been there for 10 years. There's no succession here. We have an interim CEO. So something must have gone on. What's your thoughts?
Well, I guess that the controlling shareholders in Naspers have realized that there's been tremendous value destruction in the business over the past 10 years. And the buck has to stop somewhere. And normally it stops at the front door of the CEO's office, which is the office of Bob van Dijk.
When you say value destruction over 10 years, can you quantify that?
Well, it's hard to quantify, but very simply, if you 10 years ago, Naspers' main asset was Tencent, and there are some other venture type investments. Ignoring those investments, because I don't know what they're worth, but they're probably not worth a lot more today than they were then, because they're mainly all money losing. The main asset was Tencent. If they had just kept Tencent, the compound annual return would have been 3% per annum better than where they've ended up today. And 3% per annum over a 10-year period is, that's close to 40% of the value of the business.
Those are big numbers.
Those are big numbers. If you take that the value of the business is hundreds of billions of rands.
So if I understand you correctly, if Naspers had done nothing, if the managers of Naspers had simply sat on their hands, shareholders would have been 40% better off today.
40% better off. Roughly speaking, 40% better off today.
But Bob van Dijk was well remunerated. We've seen many reports about how much money he's earned over the period. Who must take responsibility then for his appointment?
Well, I guess the controlling shareholders have to take responsibility for that. But, they are the shareholders and it's their prerogative. They control the business and it's their prerogative to appoint the managers. So, to the extent that the value has been dissipated by Bob van Dijk's actions, they've suffered at the hands of that.
Have you met Bob? Have you had much to do with him?
I've never met Bob, no.
Is that the way you like to play these things, that you actually just look at it from the outside rather than engaging directly?
I think the numbers tell the story. Sometimes it's useful to speak to management to get their side or to get insights as to how the business works, how they think about the business. But the numbers tell the story. I think Bob van Dijk has been interviewed many, many times in many, many different business and other publications. So one could sort of see how he thinks about the world. And it's very different to how I think about the world. So, I don't think it was ever necessary to speak to him to understand those things.
How so? How different?
It's just, I think he comes from a consulting type background. So there's a lot of business lingo in there, and there's a lot of growth stories. But in terms of cash flow generation, which is what business is actually all about, there wasn't much of that.
And what about the new guy, Ervin Tu? MIT, MBA, very well qualified. He comes across as very hard ass, certainly in that he took over there. Yeah,
I'm sure he does. His background, of course, he's ex-SoftBank. So, it would be unfair to prejudge. But from where I sit today, without knowing anything more, it's more of the same.
That's interesting. Were you in the conference call yesterday? In the conference call yesterday, Koos Becker took a back seat, which is not kind of the way he was when Bob van Dijk was around. He appeared to almost allow Ervin Tu to dominate the conversation. And in one or two instances, Ervin, I won't say told Koos to be quiet, but he certainly did. You knew who the alpha male was in the room, which was really interesting for a Naspers perspective.
That's very interesting. I didn't know that. I guess there would have been consultation with Ervin before he was appointed as interim CEO, and it would have been under certain conditions that he would accept the offer. And I think the dynamics would then play out as you experienced them. I'm not sure that's a healthy situation. I think the controlling shareholder and the CEO should work together as a partnership. It shouldn't be a antagonistic relationship. I don't think that's healthy. So that's probably something they need to work on. But I can understand that there's a lot of tension around in the upper echelons of Naspers because of the massive value destruction that has taken place in the past.
So this is a consequence of the board listening at last to what people like you have been saying for a while.
I guess so. I'd be surprised if the board listens to me. I don't think they care very much what I think, but I do think I reflect what a lot of people think. And it's, you don't have to be a rocket scientist to work out the value destruction that has taken place. I mean, you can see what Tencent has done, and you can see what Naspers has done, and Naspers has far underperformed Tencent. And that was the big asset. And in the meantime, they've sold Tencent shares and used the money, I wouldn't say wisely. They've used it to buy cash incinerating assets, not cash generating assets.
So what might happen under a very different, and let's presuming for a moment that I did read the room correctly, and this ex-SoftBank, Goldman Sachs, hard-assed American is going to look at bottom line performance a lot more aggressively, maybe more of an American way than Bob van Dijk perhaps looked at it in a European way, which seems a bit softer. What might happen if that is the guy running this business?
Well, it's hard to say because the American way is up to now, for the past 15 years, has been fully supportive of money-losing venture capital type investments. So I'm not sure what's going to happen. I do think there will be more of a focus on show me the money, if I can put it that way. You will definitely get more of that because I think that's what shareholders are clamoring for. But we'll see what happens. I still think that the controlling shareholders of Naspers are looking for their next moonshot. Where, Tencent was probably the best venture capital investment ever in the world. And I think they are still looking for their next moonshot and will continue seeding different businesses to try and get there. But I don't think what they've got at the moment is one of those.
So nothing on the horizon that could be a very rich strike from what you can see in the portfolio today?
From what I can see and understanding that I am not a venture capitalist, so I don't understand that world very well. So it might be there, but I think the odds are against it.
Now, we're South African, Piet, and Naspers has a huge hold on the South African media sector, for instance. It's by far the most dominant player here, but it doesn't make much money here. Do you think with, this tough American running the place, looking for bottom line first, we might see some change in the ownership here?
It's possible, but I think the South African assets are so small in Naspers' life at this point that there's some bigger fish to fry. I mean, there's some really big money-losing ventures in there, and I think they'll probably start there and work their way through it. I don't think they're just going to throw the baby out with the bathwater. I think they will look at each individual business's business case and make a judgment call on that. I wouldn't be able to say whether they will be for or against anything in South Africa. I think they will evaluate each business on its own merits. as they should.
There's wonderful stuff on the internet. I found a website that had the ages of all the Naspers executives, all 23 of them. And Ervin Tu is the third youngest of those 23 executives, and younger still than Bob van Dijk, who's only just 51. Is this a reflection of the way that the world's going, particularly in technology?
I guess so. I expect it to be that way. I think if you are looking for a chief executive of a business that needs to execute and manage the business properly, you probably want a 40 to a 50-year-old. You don't want somebody who's too young that doesn't have the experience, but you also don't want somebody who's old and tired, like me. I think you want somebody that still has a spring in their step and wants to get in and get their hands dirty. And I think the prime age of that is men and women in their 40s.
Old and tired, Piet. I could call you many things, but old and tired doesn't go along that. So from my perspective, when I saw this, given the low view that many have of Bob van Dijk and the impact that he's made, and the potential that a different style might have at Naspers, I'm looking to add this to the BizNews portfolio. Would that be, in your opinion, a silly thing to do, given that there's still such a huge discount between this and the underlying value?
So there is a big discount, and so we own the share in some of the funds we manage at Merchant West because of that big discount and because of the fact that Tencent is a good business. And I don't think you're paying very much for all the other stuff which aren't such great businesses. In fact, you could argue you're being paid to own them, which is fine. So I don't think it's a bad idea. I wouldn't want to give any advice because I'm not allowed to give advice. All I can say is that in our portfolio, we own some Naspers.
So if you were giving me a thumbs up or a thumb down, the fact that you already own some within your portfolio, which is a new thing for you because you haven't had them.
Yeah. We never used to own Naspers. We only bought them in the last year when the discount got substantially inflated.
So it's a discount play from where you are.
Very much so. It's a big discount on what fundamentally is a core good business, and possibly the controlling shareholders have now realized that maybe they need to play a different game. And to the extent that is the case, then I think the discount could start narrowing. Otherwise, at this point we're reserving our judgment. We'll see what the new CEO, if he gets appointed as the permanent new CEO, what his strategy is going forward. All I can say is not going to be a lot worse than what Bob van Dijk did.
He certainly appears to be full of confidence, and he does appear to be quite, forthright and forceful. And what Koos Bekker said was that he will run the place like he was the permanent CEO while they look around the world, which is a bit of a strange thing to do. Why would you appoint an interim CEO when you might have the right guy?
Well, they don't know they've got the right guy, but they had to it's clear they had to make a sudden and quick decision. It wasn't a long consultative process with Bob. I think the exit happened quite quickly, and so they had to make a quick decision. And so you don't make a quick decision and make it permanent. You make a quick decision and make it temporary, and then say, well, let's have a look, and then make it permanent later on when you have time, when you have had time to reflect and think about the situation.
Piet, what makes you feel that the exit happened quickly, given that he's been around for 10 years?
Yeah, he's been around for 10 years. I do think that one of the responsibilities of the board, as they represent the owners of the business, is to plan for executive succession. And with this process here, it's obviously that things happen quite suddenly because there was no succession planning or no proper succession planning. Otherwise, they would have had a replacement lined up and ready to step into the breach and carry on. They don't, or they don't think they do. So it's clear that things happen quite suddenly. And I think my guess is there was some acrimony. But that's my guess.
Yeah. When he was explaining this, the chairman, Koos Bekker, said that the reason why Bob left immediately and Ervin took over immediately, and he said as of literally of that morning, was because he didn't feel that they felt they wanted to do something differently. They wanted to do it differently because when a CEO has tendered their resignation, as it were, or that they were going to be departing, that the powers shift within the organization very quickly and people don't really listen to him anymore. And I think it was one of the publications called him, you didn't want him to be a lame duck CEO.
Yeah.
Does that hold any credence with you?
No, I don't think so. I think they probably have some corporate PR people in to help them plan what they needed to say and the message that they needed to get across, and that's the message they want the market to have. But as I say, don't judge me by what I say, judge me by what I do. From what I've seen that happened there, things happen suddenly and acrimoniously.
So the main thing, though, is that you're not going to sell your shares as a consequence of the news, but would you be buying more?
No, I would not be buying more at this point. I think when I sit back and see what the strategy is that the new executive, if he is allowed to do so, if he is actually the person that will be running the business, what his strategy and the business strategy will be going forward before you can make up your mind about that. In the meantime, the discount is still very wide, and I don't think things can be a lot worse than they have been over the past 10 years. So I'm comfortable holding the shares.
So in the basketball parlance, it's a bit of a slam dunk for him, for the new CEO. He's got a wide discount. He is trained perhaps differently, a little more rationally perhaps than, or less kind to people and more happier, more shareholder driven.
Possibly, but you only have to think back to the tenure of Cynthia Carroll at Anglo American and see what values she destroyed there as an American, with her share buybacks and all this acquisitive activity. To see that, I'm not sure the geography or the nationality of a person matters. It is what is your strategy and what is your and how you see the world, and that's what we'll need to sit back and just be a little bit patient and see, if there is change in Naspers, change in thinking and change in strategy, or not. If there isn't, then one would have to think very hard.
Well put, because we often think, well, if it's an executive from America, they would think this way, and an executive from Europe a different way. But of course, that is Cynthia kind of disproves that theory.
She might be the exception to the rule, but I'm not sure. I actually think the American economy has had a tailwind of very low interest rates for a very long period of time that hides a multitude of sins. So I'm not sure that the whole view of the world which says America is good and the rest is bad holds very much water. I think it could actually be quite the opposite.
How long are you going to give him before you make your decision on whether to sell or buy more?
Well, as long as it takes first of all, to see whether he is in fact going to be the CEO, and if he is, what is his strategy? So that, however long that takes.
So as far as Naspers is concerned, they should buck up and decide whether or not they're going to keep him there, because until that happens, there will be uncertainty from investors.
Yes, there will be uncertainty, and it'll be an environment which it'll hard to see the share price going up much in the absence of anything else happening. But having said that, it's a big business, and there's a lot of value at stake. So I'm not sure they should be too rushed in deciding exactly what they want to do and how they want to do it. I think they should take their time and decide how to do that. And I think the appointment of the interim CEO gives them that time, gives them that sort of pause to decide, hang on, for 10 years, we've been flailing around here, destroying value, not going anywhere. Let's reset and try something else. What is that? It's going to take time to come to that answer. It's not going to happen overnight.
Patience is a virtue, especially with investing. Piet Viljoen is the manager of the Merchant West Value Fund, and I'm Alec Hogg from BizNews.com.